I'd like to give you a quick start guide to stock market investing. How to start investing in the stock market in 2020 crash. Hello everyone and welcome back to my investment series. My name is Antoinetta and today I'll be talking about the stock market in 2020. I took my first financial course in early 2013 when I became interested in trading. By 2015, however, I came to realize that isn't the thing for me. It was far too stressful and it just wasn't clicking with my personality. But I didn't want to give up. I was still very passionate about finance and I decided to try something else. This was when I got into the stock market and I've been an involved stock market investor ever since. The stock market presents everyone with an accessible and affordable way to increase their wealth, or as most investors like to call it, ways to use your money to make more money. Over the years, I've had the chance to experience this for myself. My investments have done pretty well. I've received many questions both from aspiring investors and from already established financial enthusiasts with a couple of successful ventures under their belt. In all honesty, putting this piece together is long overdue, but I was busy with another finance-related project that I will tell you about later. Stay tuned. But now, I don't think that I can delay it any longer, especially given the COVID-19 situation and the current state of the market. A lot of people are worried about their financial stability for the upcoming months or even years, and many more are looking at the stock market as a way to secure their smooth sailing. The financial questions that I'm getting are also coming in with increased frequency and intensity, and I believe that it's about time I create this video. We will look at the following points. What is a stock? How to invest, logic versus emotions, the investment strategies, how to buy stocks, passive and active investing, stock research, how to gather information, annual and quarterly reports, ratios and metrics, how to read financial statements, dividends, how much should a beginner invest. Before we begin, I would like to just throw in a quick disclaimer here. Please keep in mind that, as with all other information on my website, Lifestyle Tips by Antoinetta, and my channel here, this video as well is based upon my personal experience and research. I am by no means a certified expert or your personal financial advisor. I would highly advise you to do your own research and consult with a certified professional before committing to serious investments or other major life altering decisions. It's really important just to remember that. And now, with all this out of the way, let's dive right in. So, what we need to talk about: stock market basics. What is a stock? If you are absolutely new, this is probably the first thing that you need to understand before you get drawn in technical babble. In plain and simple English, a stock is a piece of a company. When you buy a stock from a company, you are essentially purchasing a piece, a share of that company. This is how simple it is. Each public company can list a certain percentage of its shares on the market and investors can buy them. If you purchase a lot of stocks in a given company, you can find yourself owning a non-insignificant percentage of that business. Some companies will invite significant shareholders to meetings and conferences, and depending on the circumstances, this may give them a voice in the future of the business. How to invest? Logic versus emotion. Your investment decision should always be based on logic. Throughout research and facts, never invest on or a whim or when influenced by emotions. Always do your own research. While this is mostly directed at new and aspiring investors, it's something that all of us, beginners and veterans alike, need to be careful with. Do not give in to hype, panic, influences, or marketing tactics. Always be calm and very, very collected. The investment strategies. Investors make use of various investment strategies to plan out their market interactions. The most popular ways are technical analysis, a time-consuming strategy based on constant monitoring of stock charts. Fundamental analysis, a strategy based on external events, trends, and outside influences. Passive funds, a long-term strategy based on market-weighted indexes and portfolios. Behavioral financial strategy, an innovative strategy based on the behavioral finance approach. How to buy stocks. Personally, I use hl.co.uk. Recently I started using Trading 12 and Free Trade. Trading 12 has much more opportunities for us, much more stocks that you can choose from. And interactive brokers. I've got accounts in all these platforms. Passive and active investing. Passive investing is excellent if you are working on a tight schedule. If you only have 5 or 6 hours per week or per month to spend on investing, then passive is the way to go. Personally, I find that passive investing is less stressful, and I enjoy the fact that it's focused on a long-term investment, primarily due to time constraints. Active investing is for those with a lot of time on their hands. If you enjoy the financial market, then active investing may be a great pastime activity for you. With more spend on the market, you will also have more opportunities to learn new things and get up to speed faster. Stock research. If you want to be successful on the stock market, doing your research is absolutely vital. No matter which strategy you choose, you can only benefit from knowing more about the market and the companies that you work with. Quantitative and qualitative research. Most people usually spend the majority of their time on quantitative research, looking at the numbers, and about 20% on qualitative research, looking at the quality of the business. Quantitative research, the financial numbers, reports, and performance speculations all fall into this category. This is where the majority of your time will be spent on. You read annual and quarterly reports, metrics, and statistics. Qualitative research, you are looking into the company's mission, vision, and values, their culture and leadership. This helps you figure out more about the long-term future of the business and allows you to see beyond what the numbers and statistics can tell you. Qualitative research also helps you spot potential problems, scandals, and setbacks ahead of time. Where to find this information? The company's website. Public companies will have dedicated website pages for investor relations, where you can read their respective reports. Your brokerage platform. Most of the big brokerage platforms offer plenty of information to their clients, which is where you'll be getting a decent amount of data. I personally use Yahoo Finance. Generally, they will have all of that reports and the majority of statistics freely accessible. Annual and quarterly reports. Companies will publish reports covering the numbers from the last period, with annual reports covering an entire year and quarterly reports focusing on the last quarter. These reports will also contain the company's plans, hopes, and projections for the futures, laid out in detail. A word of caution here. Be careful. These reports are published by the companies and aim at potential investors. Expect things to be at least somewhat focused around presenting the company in a good light. After all, they're publishing this in the hopes that readers will invest in them. So don't forget that. Just remember that. Annual reports, Form 10K. This come out around the end of the calendar year for most companies. Annual reports are generally very long, with some larger companies publishing well over 100 pages worth of data. Still, if you are serious about investing, I would highly advise you to read the entire thing, cover to cover. Quarterly reports, Form 10Q, much shorter than the 10Ks. Quarterly reports are meant to give investors a quick, focused overview of a given period. Frequently, 10Qs will reflectively reference 10Ks, underlying projections and predictions. They're a great way to learn about what's happening with a given company right now, and are definitely worth the read. Ratios and metrics. The ratios and metrics will help you to find the stable companies from the volatile ones, to discern them, to separate them. They are yet another crucial tool that you will need to master in your investment journey. Market cap, the total valuation of the company. The market cap is calculated by multiplying the number of shares available for the company by the stock price. Beta, indication for volatility. The average for these metrics is 1, with lower values signifying lower volatility. Less volatile companies are less likely to rise or drop along with the market rapidly. Earnings day. This is when companies publish their quarterly earnings reports. A lot of these reports are public and you can freely listen to them. Volume. How much that stock is being traded. Dividends. A certain small percentage of the company's earnings can be paid out to shareholders in the form of dividends. Some stocks will have much higher dividend ratios than others. How to read financial statements. If you'd like to understand financial statements and their significance better, I would highly advise you to have a look at some accounting materials. A basic course or a short book will do. Balance sheet, assets and liabilities, income statements, company revenue and income trends, cash flow statements, where the cash is coming from and where is going. This is really important. How much should a beginner invest? When you're a beginner, I would highly advise you to start very small. Yes, just like any other change in your life, your first steps in the world of stock market investing should be taken slow. There is nothing to rush for. The stock market has existed for over 400 years and it will continue to exist long after we are done with it. So don't rush it. Don't pour all of your savings into your very first investment. Instead, I would advise you to keep saving money and get into the investing game by using about 10% to 15% of the funds that you are prepared for it. This way, even if you don't make the best choices at first, you'll be able to recover and keep working at it. This is really important to remember. What comes next? As always, I'll leave a bunch of useful links and videos below this video, along with my favorite books in the resource section down below. But if you like a more personalized approach, I've got something special for you, and I'll tell you just right now. Over the last few months, I've been working on 4 investing courses designed to help beginners take their first steps in the stock market. It features of many models, complete with presentations and videos. Totaling over many hours, packed full of helpful and beginner-friendly content. For more information about the courses, please sign up on the link. And would you look at that? It seems like we are all out of space for today, and while I do realize this video is a tad longer than my usual posts, I believe that is well worth the watching. As a matter of fact, I was planning on posting at a much longer pace. There is plenty to talk about when it comes to stock market investing, but this should be enough to help you get started in the wonderful world of finance. If you enjoyed this video and you'd like to learn more about the stock market investing, financial independence, or success in general, have a look at the resources sections down below this video. As always, if you found this YouTube useful, then please like it on social media and share it with your friends. I put a lot of time and effort to make these videos. If you want to see more, all I ask to subscribe and like these videos, to subscribe to my channel. As long as my channel grows, I will be able to make more videos and share this useful information with you. And if you have any questions, ideas, or experiences, please let me know in the comment section down below. I always love hearing from you. You can also reach me via email at info@lifestyletipsbyantonetta.com or on social media Lifestyle Tips by Antonetta. Thank you all for watching, and until next time, stay green and motivated.